to less than 20 just to wrap up this section. I'm currently recording at 4:30, November the 20th. We're still in the US session right now. So from yesterday's video, putting the pieces together, what I've more or less added is the volume bar, which I did give a nice introduction into yesterday. I'll cover that in a moment, but GBP AUD going into gold, you can see a decent amount of movement. In Asia last night we had the pop up. We'll break all of this down in a moment and we can see where the market is reacting to Asia's low here. Asia made its high, London overlap. As you can see, the next 15-minute candle respected the previous Asia high. Next one respected it as well, and then we had the sell-off over here. We'll get into that in a moment. So GBP AUD, as you can see, we burst through the 4-hour liquidity region, and 1.9 is looking as a decent target area for the current market to tap into and then rebound from. Going into yesterday, when I was breaking down the volume bars, as you can see here, this current bar on the 4-hourly, in comparison to the previous one, the volume is more or less the same. However, the candle still has 1 hour 27 minutes to go. So what this tells me is that if these two, the last 8 hours of volume is relatively similar and we're neck and neck on the volume bar right here, this could be a false push into 1.9. And as you can see where the market's already reacted to, if I scroll over here to the left, we know exactly why we've gone above and beyond and then broke back below this area in this region. What I'm looking for now is this right shoulder to be formed. But what's important is that we're reading the volume of the last two bars, the last 8 hours. The volume is more or less the same after consolidating for 1, 2, 3, 4 4-hourly candles. As you can see here, we're up around 60 pips, 70 pips, but I'm looking for it to tap into this region and sell off. So what we'll be looking for, ideally, by the time this will happen though, it'll be too late to enter on the 4-hourly. So that's when we can go into the 60-minute and also the 15-minute and break down the session highs and lows over here. But what we're looking for is to solidify that this current bar, this current move is a fake move, is the next candle to be dragged back down and the volume bar to be larger than 1 and 2. We'll get to that afterwards though. I've got a great example on gold from the video we did yesterday where that came through perfectly. If I just go over to that chart right here. Okay, so as you can see, when we came off the 4-hour region, this bar right here, the volume was very, very low. The mid bar, pulling the price back up from the 4-hourly support, you can see the volume is low. However, look at this one, the bullish bar afterwards, the bullish open, we tapped back into the 4-hourly support and then broke above the structural high on the 4-hourly. So with that being said, if you look at this bar, the third bar, so we have false move, breaker, and then here we have the correct momentum, the directional force. This tells the picture, this paints a clear story. So it's always, it's either 1, 2 bars or it can be 1, 2, and 3. As like a reversal, drive in, fake move, pause, rally, and this is what we can see right here. So the rally, it took us above 1472, found support for a while, peaked up, and then as you can see, market momentum came back down in today's London session after the false push, this false push here in Asia, this last push where it made the high. It was respected once, twice, and then we had the breakdown. Other example of this being this candle here. Look at the volume, very, very low volume. The next one, a little bit more volume as you reach into the highs. However, we were clamped back down. And then the next candle, the bearish candle right here, if you look, it's probably around 5% in terms of volume more than the previous. So this tells us this bar is the real move. This one was the false move, push into the upside, and then London has came in and stepped in to bring the price down, and we've then tore through Asia's lows over here. So GA, that's my prediction at the moment as to what can potentially happen. So we have to be careful. So with that in mind, let's go into the 15-minute time frame and look at the highs and lows which are being formed and where structure is being respected. So right here we had Asia highs, London low, US low 1, US low 2. Then yesterday, London, we had the breakthrough, and then we were more or less sat on 1.9. Pressure came through, volatility took us all the way back down into the Sunday open highs. So what we can do now is we can bring these areas across on the chart to see if they still hold relevance at the moment. So bringing this one across right here. Now what's important about the opening Asia high, which was respected 1, 2 and 3, is that right here, if you look at the left hand side, okay, if you look at the macro picture in terms of relating it into the micro, look at where 1.9 is and look at where these two barriers lie. So we have the intraday area, which I brought across, which has been respected many times, and then over here we also have the macro 4-hourly liquidity band. So when the market is going to rally into this level, we do have two major confluences, confluence 1, confluence 2. The third confluence would be the simple figure of 1.9 being a psychological level. So what I'm expecting on GA is, in fact, the market to pop up maybe 10-15 more pips. We'll see how and what reaction we get around this area. But if I just go ahead and I put the session horizontal lines on for now, so we have, there's London, then the US session opened there, and we have US closure there. I'm not going to put the 6 p.m. closure on, but we can be mindful of that, and it's right here. So 6 p.m. I've already explained what happens at 6 p.m. in the European banking sector, where everybody locks off and goes to work. So what we're going to see is, especially on the pound pairs, is a pull and fallback in price, where money is now being extracted from the market and bands have been achieved for the day. So that could be lining up very well for the next hour or 2 hours, and then we could see GJ react to this and then fall back and pull back to the downside. Then we have target 1, target 2, and then target 3 all the way at the base. So not much has happened in terms of structural change, especially on GA at the moment, but what we can see going into this a little deeper is that a heavy low was formed in the US session yesterday, so I can bring that across right there. Price consolidated, we had the US low, that's the US high, US low. The other US medium range high was respected on Sunday's high, so we got one there. Crossover into Asia, another respect there, and then we more or less consolidated for some time. Respect, 5 points, okay, of respect there coming into the London session today, and then US session is actually broken out of that region. Also, what's important to note, just on the 15-minute time frame, is that the pullback, it was supported by the MAs. I'll get into the MAs on lesson 21. And then here, hourly, huge hourly break to the upside. This hourly candle, if we remove the session overlap out of the way, you can see that it took out completely the previous wick. So it tells us that the momentum in this candle made its decision, and it's taken out not only the entire range, but the previous candle wick and the session high. So that's quite an important point to add to our artillery. Okay, so I'm going to lock this off here for GA. My thoughts, I've just explained all of them. However, alternatively, depending on the daily closure, if we do get a strong daily push through this area, if you look at the current daily candle, it has been supported 1.8892. The only thing is that if we do get the strong daily closure, that this could reach peak highs once more. But let's see how it reacts for now on the 15 and the hourly. Okay, so we're at that level right now, 1.9000. I'll come back to that in 5 minutes. If you go over to gold at the moment though, I gave a breakdown on the gold volume, and if you look at the daily time frame too, it's an absolute mess when it comes down to trying to attach a bias to this. You can't really attach a bias to gold at the moment on the daily time frame. You just have to more or less react with what you see, and then that's why the intraday session highs and session lows are really handy to catch movements rather than trying to stick to the macro picture, which is the daily and the 4 hourly, because it's not going to provide too much value in this market condition. So let's go down and then go into the 15 minute time frame. So what's happened today is I realized yesterday in the US session, US lows were formed straight out of London, then the US highs, as you can see right here, bringing this across. Okay, the US highs were formed 1 2 3 4 pullback, 1 2 3, and then on the Asia overlap, market dumps 20-30 pips. It then creates an Asia low right here, which is very important. From the Asia low, as you can see in the 15 minute, in one candle, it boom all the way back up to the US high. Then we roll over and we consolidate. What I can also see is that Asia, this was one Asia high until it was whipped back down, and we nearly again retested the Asia low. So in steady consolidation, but it's playing very well to the previous session and how they've respected the market. Before London switchover early this morning, 7:30, 7:45, markets decided to push all the way through and create the high. So in this scenario, this is why you have to be quite on point with the markings, because if I take on this exact session overlap the candle wick into the body as a high, and I'm bringing that across, you can see that the next 1 2 3 4 candles in a London session, those wicks there suggest that, and especially because the body is actually closed below the range that we've marked on so precisely, London has now tested where Asia's highs were, but they've respected what Asia did. So what's happened then is the market has rolled back over, and again it's neck and neck. Support, we've had this area which has caused, even on the 5 minute chart, if you want to get into that time frame right there and get really into it, you can see that the 5 minute area of resistance 1 2 was respected by London, and then afterwards the market has just dumped. Translating that into the hourly, we've surpassed the previous band, we've gone into the next band and absolutely melted. So what I had to do there since yesterday is quickly just go through, and this comes with, you know, becomes second nature, sorry, just with practice. So I've just gone in and studied the highs of the sessions, gone through and allow myself to delete the older ones and then throw on the fresh ones, and you can clearly see 3 sessions of the day have respected every level pip to pip. And then what we've seen was a breakdown exactly at 2 p.m. US overlap. We've then pushed back into the region, and then what's happened, boom, we've actually melted back down to the lows. Now what's interesting here is that I've just noticed now 1465. Okay, let's move this one out of the way. Let's just remove this one as well, keeping the chart as clean as possible. But the low of 1465, the candle actually closed at 1468. So, 1468.9. So that's nearly around 39, 40 pips. But if you see, if I line the crosshair up, where can we see the reaction and why? It was because of yesterday's US session when we dumped and made that low. If I draw a band from the body of the candle into the wick, look at how accurate. US has then respected the same exact low as they did yesterday. So it's like the cycle is like clockwork. And again, that's why we have to be really accurate. And just as another heads up, always ensure that UTC timings is always on London, and that's why you can follow suit wherever you are in the world with what I've showed you so far. Now from here with gold, because the US session has dumped, the high of the US is actually London's low, as you can clearly see here. So what I'm expecting now with gold is to hold this area, hold this level, and it can maybe, if I put the session overlay on at 0000, Maybe today we can consolidate. I'll bring this right over because we may forcefully be pushed into it again. One more push into this area and a spike through, and a candle body closing back below would indicate that a strong up move is probably on the cards. So this can be monitored on the 15-minute and even the 5-minute. But if we come into the 5-minute, and this is where you guys can eventually get to with a lot of practice, I wouldn't suggest going straight in there because it can get a little bit messy until you've really mastered this routine, is that 1 tap, 2 tap, we have the bearish engulfing that comes from the London low in the US high, and then from one range to the next range, pinpoint accuracy, so decimal to decimal. Then we have this pin bar, and the market's more or less figuring out what it wants to do next. So quite interesting there on gold. Good breakdown. So every single day, as you've just seen from this video and the previous 2 videos, you just have to be on point with your markings. Always ensure that, you know, the night before or the morning early on, you're getting your session overlaps in, simple horizontal line at the levels that I've showed you, the timings that I've showed you, and keep up, because there's opportunity all over the place, but you just have to have the eye for it and keep on track. But again, it all comes with practice. So that's that. Gold will pull up now, I do believe, and coming into GA, we have just now closed above 1.9. Last note is going into the 5-minute. As you can see, the step up, pullback, step up, pullback. This behavior happens a lot of the time. Now, I can't really put a percentage figure on it, and it depends on the fundamental announcements which are out for the week. But a lot of the first initial pushes, let's say if Asia has been in consolidation, as you can see from, London has been in consolidation from 8 a.m. to exactly 1:30. The overlap is at 2, so there's 30 minutes until the US overlap. The forceful PA and the forceful volume which just came and stepped into the market was quickly then pulled back 10-15 minutes later. This is more or less like a trick move, but this is why we have to have the bias on our side and always compare with the 4-hourly mainly, and also study the volume bars. 1, 2, 3, 4, 5, 6 wicks to the downside, dead volume. Going into the intraday chart over here, as you can see, it's reflected in the price action. London has respected exactly what Asia did, and now the US has more or less made its move forward. So it's all about market timings too, and just being patient. So that's that. The last thing I wanted to just quickly note was gold on the 4-hourly, the volume on gold now. So if we look at, I just added the simple trend line this morning, which I'm now going to remove, but our barriers which we set up yesterday, number 1, lows, medium term, and then we have the higher level boundary. Market pushed back through, and as you can see, it closed back below that boundary in the last 4-hour candle. We then had a perfect retest of that level, and then we've come in and tapped the medium boundary. So what can happen from now is, depending on the intraday, which we've already just broken down, I've just explained to you exactly to an absolute decimal, US session of today has respected the US session of yesterday. Coincide that with 4-hourly, we've got various confluences going on. So this is building up for a decent long potential and a huge reversal from the current area, and this can probably start to happen in the next hour and 10 minutes. We have to wait for the 4-hourly to close. So copy and paste there, that's the bias for the rest of the day, and we're now looking at gold coming up to take out the highs, because we have significant low, higher low, significant low, higher high, higher low, higher high. This could now be forming a new higher low to stretch all the way up and beyond into our weekly area of resistance, 1480. So I hope you enjoyed the video. I'm now going to do a talking point video just to throw in a few things, face-to-face video, and then what I'm going to do is add the other sequels from lesson 20 and 21 onwards.